Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Daria. We have with us Kunal Shah, Head of Commodities Research, joining in. Kunal, welcome to the show. Kunal, from here on, if you go to see the dollar index has reversed two consecutive daily drops. Clearly, we are seeing that 92 to 92.2 kind of a range. What's your anticipation from here on?
I think dollar index is definitely going to, make some upward move again. 92 was the stiff resistance for support for the dollar index, and then it can again go up to 92.50, 92.45, that kind of levels, which we can see going forward during the day.
Okay. Kunal, this week you have Powell's testimony on the semi annual monetary policy report to the Congress and inflation figures. Now, these two will be the main attractions as well. Do you think a major volatile week that could come in for the dollar as well?
Yeah, it's definitely going to be volatile, and anytime any central banker is going to speak, have a word, they communicate some of the other things to the market. At that time, markets are very volatile. So, yes, it's going to be very eventful week. Powell's testimony as well as the inflation number. Whenever these inflation numbers are there, we see a big movement in the broader all the markets. I think it's the most important data point what we can have from US. So we expect that inflations must have shot up in US. So again, there will be some hawkish statement which we can see after the data or during the Powell's testimony. So inflation data is tomorrow, 6 o'clock, I think. So previous was 5%. This time, if the inflation moves up to 5.5 or 6, then definitely is going to cause some alarm for the financial markets.
Right. So, in turn, if you have to look at gold and silver for the week, do you think it will be a slightly sideways move that we will see? However, there will be spurts of volatility the time this kind of data is out.
Yeah, so if you see what is happening from last many days, the volatility in markets are stuck in a very narrow range where they are not crashing also, and neither they are able to make any major breakout. So it seems that we are stuck in a tight range. And for gold, as far as concerned, I see a maximum upside till 47,850, 900 during the day. And on the downside, it can test levels of 47,500 to 550. uh, the fundamental right now, it doesn't seem to be very attractive, because the moment things are getting better, the dollar index starts strengthening and the gold starts going down. So uh, around 47 850 900, go short, put a stop loss of 48,090, and expect it to go down at test levels of 47,500.
Okay. And Kunal, with regards to crude as well, last couple of sessions we've been in that 75 to $76 range. OPEC has not really been able to come out with any outcome. What do you sense from here on for crude?
I think the fundamental of crude is definitely bullish, but it is already discounted all the fundamentals in the price much before, much ahead in advance. So if you are a trader, I would recommend you to go short in crude oil at 5,500. Put a stop loss of 55, 40, 45, or today's high 55, 65, and expect it to go down and test levels of 54.10, 5,400, because all the big, in spite of all the bullish fundamentals, oil is going down. So I like to continue with what happened on Friday. Friday, crude, metals, everything moved up because China cut its reserve ratio requirement by 50 basis point. So this was very aggressive move as far as China is concerned. So, but no one is thinking why they cut RRR by 50 basis point. They cut RRR by 50 basis point because they are seeing slowdown in their domestic market. And because they are seeing the slowdown in their domestic market, they have to infuse liquidity. And in order to infuse liquidity, they basically cut the RRR ratio. So I'm of the view that, oil and metals on a higher level. So I'll give you levels, copper around 730, 731, good levels to go short. 3490 should be your stop loss. 720 should be your target. Same even with, metals like zinc, you can sell around 242. Put a stop loss of 244, 20 and expect it to go down test levels of 237.90.
Mhm.
So I'm expecting, on a higher levels, you are going to see some more profit taking. China's RRR cut of 50 basis point is not going to lead to a humongous boom in the commodity prices. It is
Okay.
targeted towards the small scale and the medium scale loans. And once they get the loan, the liquidity or the business ruling will be much better, and hence these measures which Chinese government took seems to be more of a short term measure than the long term measure.
Right. So with all of this, we've spoken about base metals, we've spoken about precious metals. Do you see any traction coming in on the agri commodity side right now?
Agriculture commodity in pulses, government has imposed stock limits, so chana commodity like chana will be under pressure. In other commodity, the the rabi crops, the summer crops, you see soya bean plantation getting delayed because of the delayed rain. So that can have some sentimental impact and it can go up. But the moment rain starts falling again in Madhya Pradesh, again this will go down. So right now, if you ask me, soya oil looks slightly bearish to me. 1320 is the levels you can short August contract. 1330 should be your stop loss, and 1295 should be your target.
Right. So that's again you coming in on the commodities front. I don't think so there are any questions coming in for the day. Thank you, participants. Thank you, Kunal, as well for joining me.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.